Hello everyone and welcome to the SBI Securities Weekly Wrap podcast. So first let's discuss how the markets have been in the week gone by. Continuing its last week's fall, the Indian equity market started the week on a weaker note with sell-off across the board led by weak global cues. Spike in US 10-year bond yield to 5%, concerns of escalation in Israel-Hamas conflict, weak growth outlook by US-based companies like Meta, Alphabet, Texas, etc., and hawkish commentary from the US Fed Chief Powell were few factors which ruined the global market sentiments. During the truncated week of 4 days, the domestic equity market continued to fall for 3 consecutive days and traded in green only on last day of the week, that is on 27th October. However, it still failed to recover most of the losses as benchmark indices Sensex and Nifty lost 2.5% each during the week. Next week, key event to watch will be the US Fed's interest rate decision on 1st November. Other US data points such as consumer confidence, manufacturing and services PMI, and unemployment report for October 2023 will also be in focus. Back into the domestic market, economic data points like growth in 8 core industries, manufacturing and services PMI for October month are also scheduled to be released. Sectorally, auto sector will be in focus as many companies will release their auto sales numbers on 1st November. As per the commentary from consumer companies, festive season has kicked off on a very strong note across the consumption basket. However, recovery is K-shaped with downtrading witnessed in many consumption categories. Result season so far has been in line with expectations with healthy growth outlook by banks, NBFCs, auto, consumer discretionary, etc. On the other hand, short-term outlook is clouded for IT biggies. The Indian market will continue to take cues from the global markets while result-driven stock-specific action will continue. We believe in the current market scenario, investors can take a buy-on-dip approach in fundamentally sound businesses with focus on domestic growth stories. Talking about the weekly sectoral gainers and losers on BSE, all the sectors ended on a weekly negative note on BSE with realty, consumer durables and capital goods losing the most by more than 3% each. Less affected sectors were FMCG and power, which declined 1% and 1.5% respectively. Talking about the weekly Nifty 50 gainers and losers, this week not many were gainers due to the weak market condition. The top gainers in Nifty 50 during the week were Axis Bank, HCL Technologies and Coal India, while top Nifty 50 losers were UPL, Adani Enterprises, HDFC Life Insurance, JSW Steel and Asian Paints. Top weekly gainers in Sensex were Axis Bank and HCL Technologies, while top losers were JSW Steel, Asian Paints, Titan Company, Tech Mahindra and Bajaj Finserv. Taking a check on some key monitorables, FIIs remained net sellers during the week to the tune of Rs 9,399 crores, while DIIs remained net buyers to the amount of Rs 11,553 crores. During the week, dollar traded flat at Rs 83.21 per US dollar. Brent crude eased to $87 per barrel this week. Dollar index hovered at 106.3 levels. Moving on to the corporate developments, a lot of companies declared their second quarter earnings this week. So firstly, talking about the results from the banking space, most of the banks reported numbers either in line or better than the street estimates. We saw growth in advances and deposits. However, margins marginally compressed and the banks will recoup with the same in the coming quarters to come. Talking about the results from Axis Bank Limited, Axis Bank reported net interest income and PAT growth of 18.9% and 10% year-on-year to Rs 12,314 crores and Rs 5,864 crores respectively. Net interest margin and return on asset remained steady at 4.2% and 1.8% respectively. Advances and deposits also clocked a healthy growth of 22.7% and 17.8% year-on-year to Rs 8.9 trillion and Rs 9.5 trillion respectively. Canara Bank also reported strong set of numbers with its net interest income and net profit clocking a growth of 19.8% and 428% year-on-year to Rs 8,903 crores and Rs 3,606 crores respectively. The net interest margin and return on assets remained steady at 3% and 1.7% respectively. Advances and deposits clocked a growth of 12.1% and 8.7% year-on-year to Rs 9.2 trillion and Rs 12.3 trillion respectively. Indian Bank's net interest income and net profit grew 22.6% and 62.3% year-on-year to Rs 5,741 crores and Rs 1,988 crores respectively. Net interest margin and return on assets stood at 3.6% and 1.1%, which was up 30 basis points and 40 basis points year-on-year respectively. Advances and deposits clocked growth of 12.4% and 8.8% year-on-year to Rs 4.9 trillion and Rs 6.4 trillion respectively. From the IT space, Tech Mahindra Limited reported weak numbers, with revenue declining 2.2% quarter-on-quarter to Rs 12,863 crores. The net profit also declined 28.7% quarter-on-quarter to Rs 494 crores. So overall, the results were not that great from Tech Mahindra Limited. In the auto space, Maruti Suzuki posted strong set of numbers, with sales, EBITDA and PAT growing around 24%, 73% and 80% year-on-year to Rs 37,073 crores, Rs 4,790 crores and Rs 3,764 crores respectively. EBITDA margin improved 400 basis points year-on-year to 13%. So overall, the numbers were better than the street estimates. Moving on to the FMCG space, the numbers declared by the FMCG companies were overall decent. During the week, big FMCG companies like Colgate-Palmolive and Asian Paints reported their results. Looking at the Colpal's result, Colpal delivered good numbers with its sales, EBITDA and PAT clocking growth of 6%, 18% and 22% year-on-year to Rs 1,471 crores, Rs 482 crores and Rs 340 crores respectively. EBITDA margin saw an improvement of 400 basis points year-on-year to 33%. The company stressed on relaunch of some of its products such as Colgate Strong Teeth, Colgate Max Fresh and Colgate Zigzag. Another company, Asian Paints, also reported decent set of numbers. While its sales at Rs 8,452 crores posted a muted 0.3% year-on-year growth, which was due to extremely weak July month, EBITDA and PAT clocked a growth of 27.6% and 53.3% year-on-year to Rs 1,532 crores and Rs 1,232 crores respectively. EBITDA margin saw an improvement of 388 basis points year-on-year to 18.1%. The company sees shift in festival season and a healthy third quarter overall in the coming quarter. Within the QSR space, Jubilant FoodWorks result and overall management commentary indicated continued muted demand environment in the QSR space. However, an uptick can be expected in second half of FY24. The company's consolidated sales grew 5.2% year-on-year to Rs 1,369 crores. EBITDA and PAT, however, declined 11.1% and 26.1% year-on-year to Rs 277 crores and Rs 97 crores respectively. While gross margin increased 101 basis points year-on-year to 76.2%, EBITDA margin dipped 371 basis points year-on-year to 20.3%. Overall, the result was marginally negative for the company and similar reaction was witnessed in the stock price of Jubilant FoodWorks during the week. Within the cement sector, similar to companies like Dalmia Bharat and Ultratech Limited, ACC's numbers also indicated healthy demand environment in a seasonally weak quarter. While ACC's consolidated sales grew by 11.2% year-on-year to Rs 4,435 crores, the EBITDA and PAT saw a growth of 33.5 times and 4.4 times year-on-year to Rs 549 crores and Rs 388 crores respectively. EBITDA margin improved 1,198 basis points year-on-year to 12.4%. The clinker and cement sales volumes grew 7.3% year-on-year to 8.1 million tons. So these were some of the key corporate earnings released during the week gone by. Some major earnings which are scheduled for next week are L&T, NTPC, Bharat Electronics, IDFC First Bank, Bharti Airtel, Marico, Dabur, Britannia, Tata Steel, Sun Pharma, etc. Some other stocks which were in focus during the week were ONGC Limited, as the company won a bid to acquire PTC India's wind power unit for a consideration of Rs 925 crores. Gensol Engineering Limited bagged a contract worth Rs 301 crores from Maharashtra State Power Generation Company Limited for installation and commissioning of solar power plant. Zen Technologies Limited bagged an order worth approximately Rs 100 crore from the Ministry of Defence for state-of-the-art force-on-force tank training system. During this week, we have released a medium to long-term investment call on Axis Bank Limited at a CMP of Rs 968.5 and a target price of Rs 1,162. Axis Bank Limited is a leading private sector bank with 5.3% market share in assets, 4.8% market share in deposits, and 6% market share in advances. Some of the key growth drivers for the bank going forward is its improved asset quality, which is further expected to grow by 400 to 600 basis points and be above the industry run rate. The bank is also planning to add 500 branches in FY24. In terms of valuation, The bank is trading at a price to book multiple of 2 times and 1.7 times of its FY24 and FY25 book value. For key corporate actions in next week, kindly refer to our weekly wrap report. The link to view the report is shared in the description box below. This was all about the weekly market podcast. Thank you for listening.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.